Today, we will talk about the top 11 best stocks to invest in 2023. There are literally thousands of publicly traded companies you can invest in, not to mention the many exchange-traded funds, ETFs, and mutual funds you can buy, so it's not surprising many investors don't know where to begin. And with the recent market downturn, especially when it comes to growth stocks, there are plenty of stocks trading for significantly less than 6 months or a year ago. But what are the best stocks to buy in 2023? Although I don't have a crystal ball that tells me what stocks will deliver the best returns, I'll try to do the next best thing. In this video, I'll discuss 11 stocks that I think could be great buys in 2023 for long-term investors looking to put their money to work. The top 11 best stocks to invest in 2023 here are 1. Etsy. Before the COVID-19 pandemic, Etsy was growing nicely by connecting craft makers with customers looking for something a bit more out of the ordinary than mainstream e-commerce fare. During the pandemic, e-commerce got a huge boost, but Etsy absolutely skyrocketed, growing at more than twice the rate of overall e-commerce. It certainly helped that Etsy was a natural fit when people wanted unique face masks. But its growth has been impressive across all product categories and continues. In the fourth quarter of 2023, Etsy's marketplace sales volume was up 144% over comparable pre-pandemic levels. 2. Pinterest. Pinterest is an oasis of positivity in a social media landscape that's grown increasingly depressing and divisive. That partially flows from what Pinterest is about, which is ideas. People go to Pinterest to focus on things, not on other people. Whether it's building a dream deck, baking a kid's birthday cake, or updating your wardrobe, Pinterest gives people visual inspiration for the things they want to get done. 3. Block. Block, formerly known as Square, has evolved from a niche payment processing hardware company to a massive financial ecosystem for merchants and individuals. On the merchant side, Block processed about $186 billion in payment volume over the past 4 quarters, and it also offers a suite of adjacent services for businesses. On the individual side, Block has the Cash App, with 51 million monthly active users, as well as capabilities that include person-to-person money transfers, direct deposits, debit cards, the ability to buy and sell stocks and Bitcoin, BTC 0%, and much more. 4. Realty income. There's a solid case to be made that when it comes to value, growth, and income, it's tough to find a more well-rounded stock for long-term investors than Realty income. If you aren't familiar with it, Realty income is a real estate investment trust, or REIT, and primarily invests in freestanding single-tenant retail properties. Walgreens, WBA 0.23%, Dollar General, DG 0.08%, and FedEx, FDX 1.2%, are just a few examples of the top tenants. Realty income owns more than 11,700 properties in the U.S. 5. Shopify. Shopify operates a platform designed to allow businesses of all sizes to sell their products online, with a particular focus on empowering smaller businesses and growing with them by establishing long-term relationships. Shopify offers a subscription plan starting at $39 per month for businesses. Shopify's one-stop shop approach to enabling e-commerce has turned it into a powerhouse. It now has more e-commerce sales flowing through its ecosystem than any other company besides Amazon. However, Shopify could be just getting started. The platform has generated $5.6 billion in revenue over the past 4 quarters, but this is just a fraction of its estimated $153 billion. 6. MercadoLibre. One of my favorite long-term stock investments in the market. MercadoLibre is often referred to as the Amazon of Latin America, and for good reason. The company operates an e-commerce marketplace that has a dominant presence in some of the most populous nations in the region, including Brazil and Argentina. However, there's a lot more to MercadoLibre. It operates a fast-growing payments platform called Mercado Pago, a logistics service known as Mercado Envios, a business lending platform, and more. The marketplace saw $9.6 billion in merchandise volume in the fourth quarter of 2023, and Mercado Pago processes more than $140 billion in annualized volume, with about 2/3 coming from outside the company's e-commerce platform. Mercado Credito has $2.8 billion of outstanding loan balances and has grown rapidly so far. 7. Intuitive Surgical. Robot-assisted surgery beats the shaky hands of humans. That general thesis hasn't changed much from when I first noticed Intuitive Surgical stock in 2023. The Da Vinci surgical system is the clear market leader, and the razors and blades model helps it generate a recurring stream of revenue as its systems are used to perform procedures. Intuitive Surgical is dominant in its space with a market share of about 80% worldwide, and it has lots of room to grow as its surgical systems increase in adoption, and the number of its supported procedures increases over time. This is particularly true in many international markets, where the implementation of robot-assisted surgery could be a long-tailed growth catalyst for this excellent business for decades to come. 8. Disney. The House of Mouse is the all-weather tire of a portfolio. The pandemic hurt its theme park and movie businesses but helped the Disney Plus streaming service, which has grown into a powerhouse years earlier than Disney expected. In fact, Disney Plus now has more than 160 million subscribers less than 4 years after launching, while the company's initial 5-year goal called for 60 million to 90 million. In 2023, demand for Disney's theme parks and movies has started off stronger than ever, despite inflation pressures and recession fears. In fact, revenue is far greater than in comparable pre-pandemic times in Disney's parks, due to initiatives that have driven higher per-guest spending. On the streaming side, Disney Plus has been a massive success, and Disney is now laser-focused on the profitability of Disney Plus and its other streaming platforms, Hulu and ESPN+. 9. Berkshire Hathaway. While most of this list is made up of growth stocks, or at least stocks that have some exciting growth drivers, this is the relatively boring value pick of the bunch, but in the best possible way. Berkshire Hathaway owns a collection of about 60 subsidiary businesses, including household names such as Duracell and Dairy Queen, just to name a few. Berkshire also owns a portfolio of common stocks worth more than $320 billion that includes massive stakes in Apple, Bank of America, Chevron, American Express, and Coca-Cola, as well as positions in dozens of other companies, many of which were personally handpicked by legendary investor Warren Buffett, who at age 92 still manages the bulk of Berkshire's investments. In fact, if Berkshire were a mutual fund, it would be the largest actively managed mutual fund in the world. 10. Amazon. Amazon doesn't really need much of an elevator pitch for most people. The company has a dominant lead in the U.S. e-commerce market with about $500 billion in gross merchandise sales last year, and its Amazon Web Services cloud platform is also a market leader. However, more growth potential exists than you might think. We're a long way from maximizing e-commerce adoption. It still accounts for less than 15% of all U.S. retail sales. The cloud industry is relatively young as well and is expected to roughly quadruple in size to a $1.6 trillion market by 2030. Amazon also has a ton of potential in other areas such as healthcare, grocery stores, neighborhood markets. 11. Apple Incorporated, AAPL. First up is Apple, the largest publicly traded company in the world, if you exclude government-backed behemoths such as oil giant Saudi Aramco. Like other tech stocks, AAPL shares had a rough go of it in 2023 as recession fears and soaring interest rates spooked investors in the sector. Following a rare 26.4% pullback in 2023, Apple now trades at 28 times earnings, offering investors a sound entry point into the $2.5 trillion iPhone maker. Although its February earnings report technically missed expectations, which was more due to supply chain snarls than demand issues. In fact, Apple reported an active installed base of more than 2 billion devices, and revenue in its high-margin services segment surpassed $20 billion. AAPL stock is bouncing back from its 2023 woes, with shares up 27.4% in 2023 through April 24. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.